Good afternoon, Premium Gang. Scott G here. Hope everybody's having an awesome day. Sorry about being late. I was just running behind today. Had a few things going on. So we'll get caught up here on ES. As you can see, it's fading right now, and we're gonna go over why that is, because it does make sense that it's fading. Let me get you guys up here on my screen. There we go. Okay. So we'll give it a minute and see if anybody is able to join. I know I was late today, so again, I apologize for that. And remember, I will not be on a live stream tomorrow. There will not be a YouTube live stream because I will be out of town all day tomorrow. Probably not getting home until, well, I'd say probably about 8 o'clock at night. I'm going to be leaving probably about 9 a.m. in the morning, and I won't be back until about 8 o'clock at night, so there won't be a live stream. And I don't know how often I'll be able to update tomorrow, because the amount of time I'll be gone between, like, say 9 and 8, about 4 hours of that is driving time. So it's about 2 hours to where I'm going, and then it'll be about 2 hours back. And I'm going to meet somebody tomorrow and spend the day with them. So I probably won't be doing any trading, and I definitely will not be doing a live stream tomorrow. So just letting everybody know. Okay, so I'm going to go ahead and I'm going to kind of show everybody what's going on with ES here. And as normal, we're on the 30-minute. So let's go back. Right here was opening range. And as you guys saw in the room today, I got bold and tried to take some trades during opening range because I felt like I knew what it was most likely going to do. We were sort of right here. We were sort of in a contracting range. Okay, if you can see that. I mean, if I draw it in like this, whoop, I got to get the right tool. Got to get the right tool. There we go. Okay, I'll kind of show you what was going on this morning. Okay, so it would have looked something like this, right? So we were in this strong downtrend. Then we entered into this contracting range. You got to act like none of the rest of that is there. Okay, so this is all we would have seen at the time, right? And if you look down here, okay, also, what were we in? We were in a downward momentum, okay, on our RSI down here. Again, we're just looking for momentum. That's all we use it for. Okay, this little uptick here, it didn't occur until that next candle started. So at this point, right, we were headed down. We were in this contracting range. Although the one thing that maybe was a little bit of a signal, you see these two hammer-like things here. I don't like the wicks on top, especially this one, but they do have bigger wicks on the bottom, which is showing more buying pressure than selling pressure. But I still had a pretty good idea that I thought we were at least going to kind of break down into this zone here that had been tested a couple of times. So I was expecting it to possibly even break, right? So I was looking for it to go lower. And then here's what happened. Then we broke out to the top, right? So there was the initial candle right there. And we actually, if I remember right, I think it broke to the downside first, but it did break to the downside at one point, and I thought, okay, here we go. It may have spiked up a little bit first, and then it went down, but there was a lot of whipsaw. There was a lot of whipsaw in that first candle. So here I was, I'm thinking it's going to go down. And I think we're coming down at least into here, maybe even lower. So I get in and boom, it does this. It starts going the other way. So I take a couple, I showed you guys in the room, I took a couple of pretty big losses. One was over 300 and one was, I think, right around 200 or just over 200. 2 trades in a row. And I'm like, oh, here we go. Here we go. Because I'd already taken some trades back in here in the morning. I got up early today. I think my wife got me up about 5:45. And I actually took some trades. Then we went, and me and her went to a park, like a nature park, and walked. I walked like a little over 3 miles today, and I got my phone, and I'm trading on my phone via mobile because we had some good stuff. And then I get back, and I'm all set up, and I'm thinking, yeah, I know what it's doing. I know what it's going to do right here. This is why I always say you just can't predict and you can't assume. And you've got to be ready for anything. You've got to be ready for anything. So I took 2 pretty hard hits on this whipsaw of this original candle, but I also was able to take 2 trades that not only covered it, but made it all back. So, and I showed you guys, I mean, basically I came out a little bit to the good side, but when I say I got lucky, what I mean is, what if those next couple of trades would have went against me too? I could have wiped out everything that I'd already kind of built up, and I could have put myself like into a hole. So then I sort of slowed down, right? Then here was our next candle. We got this little false breakout that turned into a shooting star. I did take a trade up here, but because this was here, I was being very cautious, and I made a little bit of profit on it, because I could see we had this resistance here. So I knew unless we really got above it and got up into here, okay, until you got up to this wick, I was cautious. So I was ready for this. Okay, I was more prepared. Let's put it that way. It's not that I wasn't ready for this. It's just I kind of had that bias in my head that everything was saying we were going down. Okay, but then I could see this. That's why I'm going ahead and starting to draw these in. Then I could see this, the momentum was changing, right? I could draw a line from here now starting to go up. Okay, and then the next candle, boom. Okay, now it looks like it went higher, and it did, but look what it did first. Big flush. Then it went higher, right? Then it went higher. But this was around the time of day that I was telling you guys in the room, okay, I'm just going to back off, right? I've made good gains, so I'm not gonna risk it. Had a lot of whipsaw here. I was lucky to get back, those 2 big losses, and I got them back almost immediately. And that doesn't always happen. I'm just telling you, that does not always happen. All right, then we got this, okay, and then here's your next candle. Looked like a break retest, and then maybe we're going to go, right? I was watching that, and I was itching. I'm like, you know what? Maybe I should go ahead and take this. This looks like a break, retest, and go. And at the time, though, look at this. It's starting. Okay, this is a pretty sharp pivot, right? So that kind of scared me. Next candle, drop, right? So it was a good thing I didn't try to go long. And why didn't I? Let me go back again, okay? Because I could see this right here. So from here to here, we definitely had momentum going to the upside, but, okay, look at how sharply it changed and was starting to go back down. In fact, okay, this candle here, okay, that's where it peaked. And then it immediately started going down in a sharp manner. So that's why I didn't try to go break, retest, and go. And it was a good thing I didn't, right? Because here was the next candle. Boom. Okay, to the downside. Next candle. Okay, we went a little bit lower. Then we started to recover. Next candle, doji. Okay, it dipped, but then it came back up and still held above the 20. And look what momentum's doing down here. Okay, flatlining. It's not going either direction, right? So when you see this and you see this, you really shouldn't be, doing anything. Plus, it was in the dead zone. Next one, we got a little bit of a spike right up to resistance. Went right up to resistance. Next candle, there we broke resistance. Okay, right here. And then we didn't see any momentum, right? Look, this is a green candle, but look what it's doing. There is your signal. There is your warning. Be careful, right? I see we got several people in here now. Welcome, everybody. Be careful when you see, if this was in real time, meaning, right, we don't know what's coming, but you look down here, we had flatlined, right? We went here, we crested, and we started to go down sharp. That's why I did not take the break, retest, and go. And again, good thing, because then it dropped. But then we flatlined, okay, right through here, and then we started kind of going up. Now here we are, green candle, but look, we're already starting to lose momentum. Okay, so that told me be very, very careful. Hey Kelsey, good to see you, and you're always welcome. I'm just trying to help, everybody. Okay, so then next, bam. So did we have a precursor this was coming? Absolutely, right? Let's go back. Okay, this is what we would have seen in real time. Okay, and it's like, wait a minute, we've sort of been flatlining, it's going up just a little bit, but then on a green candle, we're starting to see the momentum change. Now, I actually watched a video of somebody who, they don't trade this system. They use the MACD and they use some other things, but they're basically trying to do something similar to what my friend had suggested and what I've been using here a lot lately, using this for momentum. He's doing it with the MACD and he's looking for divergences and things like that. It's the same principle, and he was explaining to the people who follow him and watch his videos how, some people say, well, how is it possible that sometimes, okay, let's look over here. No, that was about the same time. Anyway, there will be times when you're seeing these strong moves, and even though there'll be green candles, down here you'll see momentum is already going the other way. And some people are like, how is that possible? Okay, well, you got to remember, especially on a 30-minute, or if somebody's on an hourly or a daily or something like that, a 30-minute, there's a lot going on in this candle. So early in the candle, there may have been buying pressure to the upside, and then later in the candle, whether it starts to go red, whether there's a big wick or not, the momentum significantly stops or drops or changes. And so that's how you get this over here. On a green candle, you see that it's already changing. It's because the momentum inside this candle was already changing. So even though it moved up, at some point in that candle, especially towards the end of that candle, the momentum was lost. So you can have green candles and see the momentum changing. So we did have a precursor, let's call it that we better watch out because this might be coming. So the very next candle, bam. Okay, we got this drop. I did take a couple of trades on this because I seen this. They weren't huge. Let me see. Maybe I can find them. Let's see here. 125. Well, they're bigger than I thought. Okay, 125, 162. But look at my day, right? Now you can come back up here. Now this one was yesterday. Okay, the way this P&L works is anything 6 p.m. or later, it's technically today's trading session, 6 p.m. to 5 p.m. So any of those trades are on here. So this one was from yesterday. These are my trades from today, and big loss, good gain, good gain, good gain, good gain, big loss, big gain, decent gain. This was a stop out. this $50 one, I was actually up about, I want to say it was 162.50 or 175 at one point, and I thought it was going further, and I had just moved my stop into profitability. Okay, $100 loss, I can live with that. Big loss, and I'll go back and show you where that is in just a second. Then good gain, good gain. All right, I didn't even remember this one was that good. I thought this one was actually only about $100. It was 162.50. All right, so these two together did not knock these out. Okay, right here. You see, this one was only 52 seconds. I got stopped out. That's where my stop was. This one, 10 minutes and 9 seconds. And okay, let me see, 11:30. So let's go back to 11:30. Where's 11:30? Right here. Okay, right here. So let me look. Let me look. Where was that? 11:30. And I went long. Okay, I went long and it went against me. So come back down here. So here we are, and that's what happened. I'll bet you what happened was this. I saw the spike starting, and I probably thought right there was the break, retest, and go. I went long, and then it quickly reversed and dropped against me. And I was probably thinking at the time, all right, just give it a second. Just give it a second. And then it started to go against me, and then I took another big loss. So my day has been full of really good wins, okay, predictable wins, fairly conservative, and then I've got a few of those big losses sprinkled in, and luckily I've been able to recover them. So if we go back over again, I'll show you. Come back up here. Okay, so there I am for the day. Now that includes that $400. So all of my trading today, remember when I said I was up like 800 and some earlier, and I'm like, maybe I'll just stop for the rest of the day because you could just give it back. Well, then I almost did, right? I started to take some losses. And then I was able to recover those, and I'm still up 800 and something on the day. It shows 1,200 and change, but that includes that 400 from yesterday. So I'm still right about where I was when I said, hey, I'm just going to shut it down for today. It's hard though, right? Especially when you're having a good day. You want to keep trading, and sometimes you should just take what you have, put it in your pocket, and move on to the next day, right? That's usually the best thing to do. So now we knew this was coming. That's where I took these two little trades I just showed you. One was 125 and one was 162.50. I took them here because this was highly predictable. At least I felt like it was based on what I could see. Again, down here, right? Because we had not made a higher high, right? We came down here, lower low, lower high, then we made a higher low and started going up, but we hadn't made a higher high. So what does that tell us? In the grand scheme of things, right? In the grand scheme of things, on a bigger, let's just do it this way. On a bigger picture, we were in a contracting range. Okay, so we had this smaller one here, see this one? But on this bigger, when I'm saying bigger, it's still the 30-minute time frame, but I'm taking into account more time, right? Top to bottom, to top to bottom, to top, right? So what if you don't get a breakout and you don't get a higher high, well then what is likely to be coming next, right? And we already seen that momentum was starting to turn here. So I kind of figured, here we go, we're going to start to drop, and we did, right? And that's the candle we're on right now. Or we're literally just starting this new candle here. Okay, so you see that? That's kind of how I figured on these last two. I was anticipating that we were going to drop. based on this bigger contracting range. This smaller one here, that's where I made my mistake this morning, because I was looking at this, right? Looking at this, and then all of a sudden we flushed down and then boom, popped up. And I wasn't ready for it. And so I took a couple of big hits, and we had the whipsaw in there, but because of the whipsaw, I was also able to recover. Right? I was able to recover too. So, but I still say I got lucky on the recovery. I got lucky on the recovery. Because I should have just, in my opinion, I should have just waited, right? And then traded off of the opening range. Let the whipsaw play out. That's a lot. I mean, that's nerve-wracking, right? It's nerve-wracking to take like $300 and $200 losses and then $300 and $200 gains. I mean, big swings. I mean, it really, from an emotional standpoint, it's hard not to get emotional about stuff like that. But as traders, that's what we have to do. We have to be unemotional about what's going on. Now, I can tell you, I was not going crazy or anything, because I knew I had plenty of time to make good decisions and recover. Some of the days I'm most proud of when I trade are when I take some losses early. Now, I was already up. I want you to understand that from the trades I had taken early in the morning. So I was up. Even with those big losses, I was still up. Right? It wasn't like I'd went all the way red or anything like that. That also helps you. But some of the days that I'm most proud is when I take some losses early and then I just grind it out through the day and recover those losses and then go green. Like yesterday. Yesterday was one of those days. I started off horribly yesterday. I had a bad morning yesterday. Let some trades get away from me, and I was red. And I just kept grinding, making good decisions, making good trades, and by the end of the day, I was green, right? I'd recovered, well, again, that $400 trade, I was sort of counting it yesterday, but they're putting it on today's P&L. So if I take that off, I only ended up like 187 or something yesterday after everything. Okay, which is still good, right? That's almost $200. $200 a day is $50,000 a year. I was kind of counting that 400 yesterday. You put that on there, then it not only did I come back from being red, I went all the way to being like 587 to the green. So that's why I keep saying in my mind that 400 was yesterday and I'm up over 800 today. But what I'm proud about yesterday was the grind. I had a bad morning, and instead of getting crazy and taking wild swings, okay, I just got really focused and looked for great trades and worked my way back, not only to break even, but then into profitability, into good profitability. So that's what you got to be able to do when you start off, not so great in the morning. So if you lose a trade or two, now you should have limits though, right? So like if you lose, 3 in a row and you've like knocked out 30% of your trading account or something like that, you probably should just shut it down for the day, because it'll be hard not to get emotional and then to overtrade and revenge trade. And when we say revenge trade, that means you're making bad decisions trying to get back your losses. When I say grinding, I'm talking about, okay, I'm red, whatever it is. Let's make a number up, whatever it is. Okay, just make a number up. I'm red, and I'm not going to try to get that back on one trade. I'm going to try to get that back little by little, making really smart decisions, and you grind your way back. That's the smart way of doing it. All right, let's see. If you had entered on the break of the small contracting range, where would your 30-minute profit target have been? Okay, you're talking here, and where would my take profit target have been to the top? It would have been just underneath the 20, maybe even the top of this wick. Yeah, maybe even the top of this wick, but definitely just underneath the 20. So it went way up here, but I wouldn't have been shooting for that. Okay, I would have been much more conservative, either right here or just under the 20. Okay, but I was expecting it to go this direction, and then I was expecting it to get kind of down right about in here to about where the 200 is. Okay, so I was looking for this, and I already had a plan mapped out. Once it got down there, I was going to trail my stop down to about right here, and if it would have got there and then continued down, because this is now the third time. Okay, right there, one. Okay, over here is where this zone was created, right here. Okay, look at this. There's one. Here's two, second time. And that didn't actually get there. Okay, it's actually a few ticks from here, so it didn't get there. But I was thinking here, if we broke and came down, that would have been the third time that this might get weak. So I had a game plan that if this would have broke this way, now I did get in, right? Because that's how I took a loss. But I was thinking T1 somewhere right above here, but trailing a stop to about right there. That way, if it got there and just sort of waffled and then went lower, then I could just keep on trailing it. Because I was thinking, this zone's got to be starting to get weak. This would be the third time. This would be the third time we're getting down in there. Yep, same. I was excited. That one tricked you. Yes, it did. It did. And that's why, again, you're reading Trading in the Zone, and that's what he talks about in there. You must be ready for anything at any time. Any given trade can do anything. But over time, okay, in reality, okay, all the indicators were that this should have probably went to the downside. Right? That's all we can do is take the information that we have at the time, right? The information we have at the time. We had come up here, we had a strong move down, we were contracting, momentum was to the downside, although it had started right there, started to pop up, momentum was to the downside, so everything, and again, looking back, I knew this zone had been tested twice already, so in my mind, again, in my mind, I let my mind talk me into something there, we're going down, right? And then we didn't, okay? Then it spiked down, and then it popped up, and then it spiked down, and it popped up. I mean, it was really whipsawing on that first candle. And again, I was just lucky to be able to get back out ahead after taking the two big hits. But that's why I thought it was going down, right? That's why I thought it was going down. Yeah, when you were saying like a price target there, I'm just always conservative, right? I'm just always conservative. Yes, we're below the 20, so until we get back above it, and when I mean get back above it, I'm talking about holding above it, okay? I'm trying to protect against it coming up and hitting that and bouncing down big, right? That's what I'm trying to protect against. So that's why if it would have started coming that way originally, and that's how I would have analyzed the trade, I might even have had a target like right here. Because you know me, I'm conservative. That still would have been about $7 just to right there. And then if you come up just a little bit below there, now you're looking $8.50, something like that. Oh, you're welcome. You're welcome, Kelsey. I'm always conservative. In the long run, it's going to serve you better, right? You may hit the occasional home run, but if you're, one of my old mentors from way back, he used to say, I want to hit singles and doubles all day long, and I'll occasionally hit a triple or a home run. But I don't want to swing for the fences. I don't want to swing for home runs. Because think about it in real baseball in the major leagues, most home run hitters are also strikeout artists. They strike out a ton, right? Because they're swinging for the fences. But the guys who hit for a high average, they mostly hit singles and doubles, right? They're looking to make contact. They're looking to make the smart play, put the ball in play. That's what we're trying to do with trading. Yes, that can be correct. You know, the larger the time frame, typically you are looking for a bigger move. You know, so like if I go to the 4 hour, give me 1 second here. All right, let's see if we find something that makes sense. Give me a second here. All right, so like this basing area here on the 4 hour, right through here. Let's say, okay, and it's also a little bit of a contracting range if you look at the wicks. I can draw it, make it a little bit easier. If you look at the wicks, okay, it was also a little bit of a contracting. So if you get this break here, right above here, that is 31.33, and my target would be the top of these candles. That is 31.58. So 33 from 58 is 25, right? Yeah, so that's a $25 target. Now, it didn't quite get there. It got almost up there. Got to 57.75, got within 1 tick. That's why you got to be ready, right? That's why you got to be ready. It got within 1 tick of what my target would have been, but that would have been a $25 target, but on a 4 hour chart. That's a 4 hour candle. Within this candle, price could have been going up and down and up and down, you know, $5, $10 at a time. So when you swing trade, you got to be able to just like literally, once you set your stop, you got to put it out of your mind. It's almost better not to watch, right? Because you've got to endure those swings. In this one candle, that 4 hour candle, there could have been multiple $5 or $10 or maybe even $15 swings before it went all the way up here, right, and then settled in. Yes, you're going to have more risk because you have more reward, right? It's always give and take. So if you're trading a higher time frame, yes, you're going to have the potential for more reward, but you also are going to have bigger risks. Now, you don't have to have bigger risk, and what I mean by that is you still should set your stops at a risk tolerance you're comfortable with, but you'll more than likely get stopped out more often as well, right? Because you're taking bigger swings, right? You're swinging for the fences. Trying to get a $25 gain, that's a home run. Right? Whether it's an option trade or it is a standard contract trade. A standard contract trade, that would be, let's see, $25 would be 2,500. Yeah, 2,500 bucks on a standard contract. So on one trade, you're trying to make $2,500. That's you're swinging for the fences, right? So that means you're going to strike out a lot. You're going to get stopped out a lot. You're going to probably lose more than you win. Now, I've talked about it before. I know some traders who are professional traders who they trade really, really large size, and they're going for like 5-to-1, 6-to-1, 7-to-1, 10-to-1 gains, and they only win about 30% of the time. But they make tons of money because they go ahead and they understand the risks. They know they're going to have a bigger stop. They know that they're going to lose 7 out of 10 trades, but then they know that the 3 trades they win are not only going to make up for that, they're going to significantly make up for that. I mean, just do the easy math in your head. Okay, let's just say you were 5-to-1? Yeah, 5-to-1. If you were only trading $100, now these guys are trading like 50 grand a trade, but if you were only trading $100 and you lost 7 times, you lost 700 bucks. But on the 3 times that you did win, you won 1,500. So on 10 trades, you're up 800. That is I'm just telling you, it is very, very difficult for the average retail trader to be able to trade like that mentally. They get beat down mentally and psychologically because you're always losing more than you're winning in terms of the trades. So if you lose 7 out of 10 trades over and over and over again, even though if your risk to reward's proper, you're making say $800 on if you're only risking 100 on every 10 trades, it's still mentally difficult for the average retail person, man or woman, to be able to endure that much losing, because our brains are trained that everything we do, we got to win. We got to win every time. We got to win. We got to win. We got to win. The people who can trade like that, and these guys are pros. I mean, this is what they do. They don't care, right? They understand, and they just totally have trained their minds that it's part of the game. It's just part of the game. I'm going to lose 70% of my trades, but on those 3 trades I win, they're going to be huge. And they're going to far outweigh my losses, and in the end, I'm going to be, trading. So just think about it. Like I said, these guys, they're trading like $50,000 a trade. So if they win 3 times, right? Now they're not risking 50,000, so I shouldn't put it that way. Let's say they're risking 10 grand. All right. So if they win 3 and they lose 7, they lost 70. But then they won 150,000 on 3 trades, so they're up 80 grand over 10 trades. And they just do that over and over again. And these guys don't trade like we do. They're not scalping. They're not necessarily day trading like we do. There may be a week that they only take 3 trades the whole week. But there may be days that they take 3 to 5 trades in a day. They only trade, whatever their setups are, whatever their strategy is, they only trade it when it comes around. So like I said, some weeks, maybe they only take 3 trades the whole week. And then there's sometimes they may take 3 to 5 trades in a day. Okay, so let's see here. Yes, psychologically, it's much easier to trade something like a 30-minute. Definitely, right? I think 30 minutes, that's why I trade it. I think it's a good mix in between the higher and the lower time frames. Gives you reliability. It keeps you somewhat patient, right? Okay, so far we're putting an inside candle here, but you see the whipsaw that we're getting on this one, right? So we broke down, we came back up right here to resistance, and now it's pushing down again. But yes, from a psychological standpoint, much easier to trade something like a 30 or a 15-minute. Now, I still think that mentally it gets really tough when you get down to like the 3-minute, the 2-minute, the 1-minute. I think that's psychologically difficult as well. That's why I like the 30-minute. You know me. You guys know me. I trade mostly the 30, but sometimes the 15 and sometimes the 5. The only time I trade other time frames is when I'm just trying to show you guys that what we teach works on any time frame. But it's still challenging. Still challenging. Going back a few weeks ago, if you remember that one week, like each day I was trading like different time frames, and the one day I went all the way down to like the 1 minute. Man, that's mentally exhausting to me. That is mentally exhausting to trade like a 1 minute. So anyway, let's see here. Really, you'd want to see it take this out here. Okay, and then you've got this wick, and then you've got this wick. Let's look here. Okay, so far it shows we're losing momentum, right? Shows we're losing momentum. But we're getting late in the day too. Now we'll probably see some increased action during power hour. We probably will. And so far, we're still below this bigger contracting range. You know, you could almost say that this was a break and a retest, and that it should go lower and maybe back towards opening price range. Maybe back towards opening price range. We'll see. I don't think I'm going to take anything right now. I'm going to leave this alert here just because I want to see if it makes it all the way back. You know, we talk about that a lot. how many times throughout the day, no matter where price goes, at some point it comes back and retests opening price range, right? It could be down $50, $60 and it'll come all the way back and test it, maybe even go through it. Or it'll be up, big, and then at some point in the day it'll come back and retest it. That's one of the reasons we keep it marked. So, okay. Take a few minutes here. Let's go back and let's look at, we'll just look at a few of our watch list. I'm not going to look at them all. Okay, so the first one was CODX. And I don't think, oh yeah, we had a trigger. Trigger was 1622 and it's been 1585. 1522 is 37 cents. And average size candle, like yesterday's candle was only 60 cents, right? So 37 cents, that's probably made some money there. That's a cheap stock too. Okay, GDX, which is the Gold Miners Fund. Nothing. Let's look at GLD. Usually they're going to be very similar. Yep. It actually did trigger and then came right back in. Let's see here. It would have triggered at 161.77 and it went down to 161.44. So it was only like 30 cents and then came back in. Plus you had the 20 there. For me, that wouldn't have been a trade to the downside. You got that 20 right here below it. Okay, that is gold, the ETF of gold. Intel, INTC. Okay, we had a trigger there. I saw it. And get back over to it. There we go. Oh, it's weird. There we go. Okay, so we would have triggered at 60.06, went as low as 59.32. So about 70 cents. And let's see, like today's candle's $1.20, so 70 cents on a $1.20 move. Probably made money there. It's all relative. IWM. Okay, we would have triggered at 141.32. Went as low as 139.81. So what did we say? 141.32. So it'd be $1.30 down to $1.40, and then we went another 20 cents, so about $1.50 move. Okay, on IWM. Let's see. Let's look at Pepsi. I'm not going to go through them all. I'm just going to pick out a couple more. And the only reason I want to look at Pepsi is because it was an inside shooter. And what that means is a shooting star that was also an inside candle. If you ever see me put that, if I put like shooter or hammer, but it's like an inside candle, that's what it means. All right, so it would have triggered 131.49, and it went as low as 130.63. So not quite $1, about 80 cents. About 80 cents. Then it reversed and came back up through. So here you can see we put in a single candle power reversal. Okay, so you could have took 80 cents this way or wherever you would have got out, and then you re-enter right here going back to the upside. Now let's see, that would have been the better trade. 131.42 to 133.13. So that's $1.60, 10, about $1.70 going the other direction. Okay, so you could have took it this way, and then when it reversed, okay, single candle power reversal, you take out opening price here going the other way. So it took out both sides. This is an outside candle now. Okay. And maybe we'll pick out one more. Let's look at play. We'll see if anything happened on the daily. It was setting up for a potential 3-candle pattern play, but we don't know. No, we got that 20 there though. Okay, you see what I was looking at. Here's your big candle. Okay, and then here was our resting candle. It tried to go lower, or actually it opened up down. It gapped down, tried to poke below, but it was sitting right on the 20 and it pushed back up. So there really wouldn't have been anything there unless you took it the opposite way. Because it did try to poke down, and then it immediately reversed and went back up. So let me look here. Went to the upside over $1.10, which on play, it's only a $16 stock. That's a pretty good move. And let's go back now. Let's go back to the 30-minute, and we'll wrap this up. We'll look at ES. And everybody else can enjoy their afternoon. And again, just a reminder, I will not be on tomorrow. Yep, we're not doing anything. Okay, unless something really happens here, there won't be any fireworks until during power hour. This is most likely going to end up an inside candle. Okay, but what you'd be watching for is if it takes out the bottom here, right, maybe you got a chance to get back down here near opening price. I would have a target just above. Okay, or if it reverses and gets back above this level, okay, then you're looking at breaking through here, 31.19, and then up in here, 31.25. Okay, to the upside. That's if it reverses and can get up above here. If it takes this out, your first target's here. Then your next target is really kind of down here, but if it could get below there, even though these are all long wicks, you see how they're all, except for this one sticks out a little bit more, because they're all kind of lined up there, it could really get going. It could, and then you might be looking down in here for like a T2. Okay, oh, look at it pushing. Look at it pushing. Huh. I said probably weren't going to get any fireworks until power hour, and then all of a sudden it started to push lower there. We'll stay here just a minute. We'll see if anything happens. And if it doesn't, what do we got? We got less than a minute and a half until the candle change. But anyway, I don't want to like just keep you guys here just looking. So you just know what to look for. If it breaks here, then we're looking to try to get back to here and then maybe down into here. If it breaks to the upside above here, this is your first area, and then this is your second area, right up there. Okay, everybody, have a good one. I'll see you in the room a little bit tonight, and then tomorrow it'll be very sporadic because I'll be gone. So you guys have a great evening. I'll talk to you later. Bye-bye.